Are you planning to buy a home now or waiting until 2026? Well, let's be honest. With all the talk about interest rates potentially dropping and with the uncertainty about what the 2026 market will bring, so experiencing some form of hesitation is completely normal. Stay tuned till the end of the video because today I'll be covering all the major things to consider before you make a decision to buy a home. Hey there, I'm Denise Dyrdek Lunsford with Coldwell Banker Heritage, and I believe in making your dream my mission. Today, I'm walking you through everything you need to consider when buying a home now or waiting until 2026. And by the end of this video, you will have a clear framework for making the right decision. So let's dive right in. Understanding the mortgage rate picture. Let's start with what everyone's really thinking about: interest rates. What experts are saying about the housing market of 2026 is practically the same thing over and over again. Rates might come down. Forecasts suggest the 30-year fixed mortgage could decline by the end of 2026 to around 5.9, which could be cheaper than borrowing rates we're seeing right now in November of 2025. But here's where it gets tricky. That's a forecast. It's not a guarantee. And now matters. If you're watching this video in November of 2025, rates are sitting around 6.5 to 7%. If rates do drop to 5.9 by the end of 2026, that's an improvement for sure. But what if you're someone who waits all year for the rates to only drop slightly? You've missed a whole year of building equity. Or worse, what if rates don't drop as expected? Here's the real situation. We're coming out of the Federal Reserve's quantitative tightening phase, which is positive for rates potentially moderating. But we're also dealing with inflation that's being stubborn, which could keep rates from dropping as much as some optimistic forecasts suggest. The truth is, the right time to buy a home is now, or in 2026, depending partly on factors nobody can predict with absolute certainty. Now, here's something important most people don't think about. If you buy now at 6.8 and rates drop to 5.9, you can refinance. Yes, refinancing has costs, but if you're looking at a potential rate drop of almost a full point, the refinance typically pays for itself pretty quickly. So buying now doesn't lock you into a bad rate forever. It just means you'd want to monitor the market and jump on refinancing opportunities. But if you're waiting, you're betting that the rates drop enough to make waiting worthwhile. Well, in Montgomery and Greene County, where we're seeing median home prices around $275 to $315 as of November of 2025, well, let's do some real math here. On a $300,000 home with 20% down, the difference between a 6.8 rate and a 5.9 rate is roughly $150 to $170 per month in lower payments. That's a real savings, but you need rates to actually drop that much, which brings us to the next point. What about home prices? Home price appreciation. Will they go up? Will they go down? Will they stay the same? This is where the real estate market trends of 2025 get interesting and honestly a bit confusing because the forecasts vary. Some forecasters like Zillow are projecting a slight decline or a very modest growth in national home prices for 2025 and 2026. But other forecasters are saying median prices will rise 4% in 2026. Following a rough 3% growth in 2025. So what does this actually mean? It means experts don't agree, which is normal in real estate. The truth is, local markets matter way more than national forecasts. What happens in Montgomery and Greene County doesn't necessarily follow the national average. In our local market, how long housing prices will stay high depends on several factors. Inventory is one of the biggest. Right now, we're still seeing limited inventory in desirable neighborhoods. When supply is tight and demand is steady, prices tend to hold or rise. If 2026 brings significantly more inventory to the market, and some forecasts suggest it might, then you could see slightly more buyer options and possibly a moderation in price growth. But moderation doesn't mean crash. Here's what I'm seeing on the ground. Single-family homes in areas like Beaver Creek are still attracting multiple offers. Condos in downtown Dayton are moving. Family homes in Kettering are selling. In areas like Huber Heights and Fairborn, where homes run $215 to $280, we're still seeing steady activity. The market isn't showing signs of a dramatic price collapse. So let's think about this realistically. If you buy a $300,000 home now and prices rise 3 to 4% in 2026, that home could be worth $309 to $312 by the end of 26. You've built equity through appreciation. If you wait and prices do rise, you're now buying that home for that $309 to $312, plus potentially still dealing with higher rates if they don't drop as much as hoped. The math doesn't always work out in favor of waiting. On the flip side, if prices actually decline, and again, that's not guaranteed, then waiting might save you money. But are you really comfortable betting your housing decision on a chance that prices might drop? And even if they drop 5%, you would need rates to drop enough to offset that savings. Plus, you're losing a year's worth of equity building. The affordability and supply equation. Let's talk about something that affects all of us. Affordability. What happens if you wait to buy a house in terms of affordability might actually get worse, not better. Still, a real challenge right now. We've got high borrowing costs. Those 6.5% to 7% rates combined with historically high home prices and limited supply in many markets. For a first-time home buyer ages 21 to 31 or a professional couple looking to upsize from a $250,000 to a $350,000 home, affordability is tight. I get it, but here's what I'm wondering. If you're struggling with affordability now, will waiting until 2026 really help you? Let's say rates drop to 5.9%. That improves affordability for sure. But if prices also rise 3 to 4%, some of that benefit gets erased. And what if you're waiting and rates don't drop that much? You're still facing the same affordability squeeze, only a year later. More homes might come on the market in 2026. That could be good. More inventory gives you more options. You're not in a bidding war for every decent property, and you might find something that you really love instead of settling for whatever's available. More inventory could also mean more competition from other buyers who had the same idea about waiting. The risks of waiting to buy a home include being in a waiting pattern. While prices potentially rise, inventory doesn't actually materialize as expected, or you're still dealing with affordability challenges. Meanwhile, you're paying rent or making someone else's mortgage payment instead of building your own equity. Your personal readiness. This is a real deciding factor. Let me ask you some honest questions. Do you have a stable income right now? Is your credit score good? Have you paid down high interest debt? Do you have a down payment saved plus closing costs? Is your job stable for the next 5 to 10 years? Or are you thinking about relocating? If you answered yes to most of those, then honestly, you might be ready now. You could lock in today's price, start building equity immediately, and either refinance if the rates drops or just ride it out knowing you're building wealth through homeownership. But if your credit needs work, if you don't have a down payment saved yet, if your job situation is uncertain, or if you're dealing with significant debt, then waiting until 2026 could be incredibly smart. Use that time to get your finances in order, pay down that debt, build your down payment savings, improve your credit score. In a year, you'll be in a much stronger position when rates do come down and inventory increases. You'll be ready to act decisively. This is where I see people make mistakes. They either rush because they're scared of missing out, or they wait indefinitely because they're paralyzed by uncertainty. The sweet spot is being ready when the market presents an opportunity. The local market matters. What's happening in your area? Should you wait to buy a home right now or not? Also depends heavily on what's happening in your specific neighborhood and price range. In Montgomery County, areas like Centerville, Washington Township, and Oakwood, prices have been holding strong. Homes are selling, inventory is limited, and competition is real. Waiting in these areas might not save you money because demand is steady. In Greene County areas like Beaver Creek and Xenia, we're seeing similar patterns. Good neighborhoods with community appeal are holding value. It's not a buyer's market where you're getting huge deals. it's still a competitive environment. In areas like Huber Heights, Fairborn, and parts of Dayton, prices are lower. Inventory is a bit more available, and you might see more moderation. If you're buying in these areas, waiting might give you more options, but you're also potentially waiting for advantages that might be modest. The key is talking to a local realtor, someone who knows these neighborhoods, these price points, these streets, about what's really happening. National forecasts are nice, but they don't capture local nuances. Days on market in your zip code, how many homes are currently listed, how much competition you're facing. These are the things that actually matter for your decision. So my recommendation. So here's how I recommend thinking about buying a home now or waiting until 2026. It's not rocket science. It's just asking yourself the right questions. First, personal readiness. Are you ready financially and emotionally? If yes, buying now makes sense. If not, use 2026 to get ready. Second, affordability today. Can you comfortably afford the monthly payment at the current rates? Not just barely, but actually comfortably. If yes, you're probably ready. If not, either wait or look at less expensive homes. Third, local market. What's your specific neighborhood showing? Are the homes selling fast or sitting? Is inventory tight or available? This matters more than national news. Fourth, forecast versus risk trade-off. So what happens if you're wrong? If the rates don't drop as much as you hope, can you still be okay? If prices rise instead of fall, will you regret waiting? If you buy now and rates dropped, will you refinance or just be fine with your rate? What experts say about the housing market of 2026 is useful context, but it's not your decision maker. Your situation is. Look, here's my honest take. If you're ready now, and I mean truly ready, with finances in order, down payment saved, and a timeline that works, I'd lean towards buying now. Real estate is a long-term investment, and waiting costs you time. You could be building equity, creating stability for your family, and locking in today's prices. But if you need 12 to 18 months to get your finances stronger, improve your credit, or save more down payment, then absolutely use that time. By the end of 2026, you'll be in a better position to take advantage of potential rate improvements and increased inventory. The worst position to be in is waiting indefinitely while time passes and you miss opportunities. Thanks again for joining me today. If you liked it, give it a thumbs up and share it with your friends. Make sure to share your thoughts in the comments section below. And if you have any questions, mention them too. I'll make sure to answer them in my future videos. If you want to connect with me directly, all my contact information is in the description box below. Don't forget to subscribe, hit the bell icon, and stay up to date with the new videos. Once again, I'm Denise Dyrdek Lunsford with Coldwell Banker Heritage, and I believe in making your dream my mission. I'll see you in the next video.